All right, good evening, everyone. I call this meeting to order. Welcome all the guests that are here this evening. First thing that we need to do is approve the agenda.
Motion.
I'll second.
We have a first, Dale, second, Jeff. All in favor, say aye.
Aye.
Opposed, the same. Okay, agenda is approved. The next item we have is the member requests to address the board. This is McNeely.
Thank you. Thank you for allowing me to be here this evening and to address the board. I'm going to try not to read my notes, but my memory's not as good as it used to be, so if I refer to them, that's why. I first want to start out by saying that I'm a member, not a member of any particular group that has to do with the REMC. I'm just a member. I do have some issues, and these are things that to me concern the board. It's not a staff issue. It's not an issue or concern about my bill. There are several ways I could have addressed this. Could have taken out an ad on WTRE. I could have written a letter to the editor. I could have done a lot of things, but the issue is here, and that's why I'm here this evening. 4 concerns. 1 is a general concern. 3 are more specific. The general concern is what I see as a dysfunction in the way this board is operating. The specific items include lack of communication, lack of transparency, and the election campaign that's currently going on. And I'll address each one of those. A couple of other housekeeping things. I'm going to be leaving as soon as I'm done. My understanding was that this is me talking to you. This is not going to be a question and answer thing or a discussion thing. If you're interested in that, I'd be more than happy to speak with any or all of you. But believe me, it has nothing to do with that not happening this evening. Not a fan of soliloquies. I'd much rather have a discussion and have an interchange and exchange of ideas, but that's not the way the forum is, so it is what it is. So my first point, what I see as a member, by the way, let me also say, I'm a member customer and a member owner. By that, what I mean is I'm a member customer. I get service from the REMC. And that, as far as things are going, is it affordable? Is it a reliable service? Am I happy with the friendliness of the staff that I interact with and the promptness of my building and those sorts of things? Absolutely. As a member owner, as a shareholder, not quite as happy. And again, why I'm here this evening. So let me just say, I think that we have some things in common. I think we're all concerned about the REMC, about its members, about the communities that we live in and serve, and about the organization as a whole. And I think, man, I could be wrong here, but I'm going to make the assumption that we all appreciate the 7 co-op principles and how it's a partnership, it's a co-op, it's a working together, and not a take it or leave it, here's the service, like I could get it any other service. I think there may be some differences in the way we see things because I see a board's role by the definition of you set the strategies, the missions, the visions, the budget. You hire a CEO or a general manager or somebody with that title to then take care of and enact your direction. I think some of you agree with that. I think others of you see it, the board's role, as making major decisions. And I would kind of argue that maybe they're not so different. There really aren't the major decisions, the vision, the mission, the strategy, what in the heck we're doing here. Not necessarily how we do it, but our bigger picture. Those other decisions aren't unimportant. But again, that's why there's staff to do that. I don't see that you necessarily want to be the one to send out the bills and handle those day-to-day things. And I don't think, my opinion and by definition, that that's the role of a board. But I've seen a lot of these 4-to-4 ties, and that's where we seem to be at differences. So I wanted to share my thoughts on that with you and what I see. Moving on to the lack of communication. On April 28th, I sent every board member here an email. I got 4 responses. On May 18th, I sent every board member another email on a different topic. I got 4 responses. So apparently, I, as a member, I'm sort of feeling like I'm not important enough to even get a response to my emails. That's not, as an owner member, the feeling that I'd like to walk away with. Lack of transparency. The April 28th meeting that I sent, or email that I sent, was about the board meeting from the 27th. And there was a vote. There was a motion to disclose results, findings of an investigation that had been conducted, and the cost associated with that. Vote was taken, 4-to-4 tie, and by default, the decision there was that members can't know the results of that or how much it cost us as members. Well, I don't remember, so somebody correct me if I'm wrong here, but there wasn't anything in that motion about names of anybody involved. It was about what the results were, the findings, and what it cost us as a membership, us as a co-op. The problem here is a transparency issue, because it kind of leads members to think that maybe the board's hiding something. Maybe they're not attending to some error that was found. Maybe the board wasted time and money tilting at windmills because there was no wrongdoing. Here's the thing, I don't know, because I'm a member, wasn't privy to any of that. All I know is that it took place. And because we couldn't decide one way or the other, the default answer was, you members can't know these things. Again, because it was a 4-to-4 tie, there was no majority that said, no, we don't think this is appropriate because we know what we know and we don't think it's necessary. There was no, it wasn't unanimous. It wasn't even a majority. It was a 4-to-4 tie. So if we can't decide and that's how we do things, here's a possible solution. Make it a referendum of sorts. Why don't you ask the membership? Do they want to know? I thought maybe it was just me, but I attended the Watson Wings and I found out I wasn't the only person who watched that meeting and I wasn't the only person who did want to know these things. Not the names, but what's going on here and what's being done, if anything needs to be done at all about it. And maybe nothing needs to be done. Again, don't know because there's no transparency. It's a hidden issue at this point to those of us on the outside. Oh, us members, by the way. That brings me to my 4th point, and that's the election campaign. I'm not happy about the election turning into a campaign like we would see for any other governmental office. There's nothing that can be done about that according to the bylaws. There's no action that prevents this kind of activity. But I do think it is what it is, that it's the responsibility of every board member to encourage members to attend the annual meeting if they can, and to vote by any method that's available to them, whether that's mail-in, annual meeting, electronic before the meeting. I think every board member should be encouraging that in any form that the member has available, has the time to do, has the skill, electronic availability, whatever the case might be. We've got multiple options. I think as board members, you should be saying, here's 4. Doesn't matter who you vote for, it doesn't matter how you vote, but just vote, participate, let us know, be active. I'm going to skip that point. what I would like to do is ask the board to consider a change in the bylaws. And not necessarily a change to restrict campaigning, because I think it's good that people know who they're voting for no matter what the situation. Maybe I'm a little old school. The way I look at it, me as a member, as an individual, is this is a cooperative matter. This is not a public matter. There's no need to air our dirty laundry. This is not something where everybody can vote and be this party or that party or, this platform or whatever the case might be. So there's no need to involve REMC members, people who are not REMC members from the public. And the fact that there's an election and what's going on and that we have a 4-4 issue and that we have, let's handle our business. It's our business. Let's handle it. Why do we need to have it advertised so that people who are not REMC members go, what's this all about? Well, why is there a campaign? I thought the elections were over. What's going on here? I don't think it's bad to have opinions and what you want to do as a board member if you're elected or re-elected. I think that's great. But that's for you to communicate to REMC members, not to the whole general public and, oh, there's an issue or, oh, there may be something wrong because this is the grand problem that I'm going to solve. So those are my concerns. Communication, dysfunction, lack of transparency, and this campaigning thing that's going on right now. My opinion as an REMC member, as a member owner. But I will say before I leave, again, I think we're all on the same page. I think we all appreciate the co-op principles. But it's getting hard for me to defend those principles with the people I talk to who are starting to say things like, we just need to disband it, get Duke to buy it, and get our electricity from them. Then we won't have all of this going on. It's not just things I see when I talk about the REMC and I try to build up the fact that it's a cooperative and as a group, we can do things that you can't normally do as a member or as getting service from someplace else. That's what I'm being met with. So can you, as a board, help me as a member address that concern? And again, I know it's soliloquy time. You're not going to answer that. It's a rhetorical question in a sense, but you all have my email because I sent every one of you 2 emails. If you don't, you can get it. Brett has it. I've emailed him asking for things and asking for information from time to time. And Brett, you have my permission to share my email with any of the board members who would like to communicate with me otherwise. So again, I want to thank you for your time. The fact that there have been no questions does not impact this, but I've got other things I need to take care of this evening, so I will be leaving. I look forward to hearing from some or all of you. And again, I appreciate your time and appreciate being an REMC member, appreciate the affordable and friendly service and reliable, and then appreciate all of the things that happen on that side of it. Like to see us do an equal or better job on this side. That's it. Thank you.
Thank you. All right. The next item, we're going to have the audit report out. Maybe it doesn't need it. We'll take it. Thank you. We're going to share. He goes off.
Well, jump right into it. My name is Chris Hawkins. I manage the audit this year, and I say this year, this is for the year ended December of 22. So For those of you that were in this room last time I presented, it was in September of 21 to go over May 31, 2021 numbers. And I think shortly after that meeting, or in the coming month after that meeting, this group decided to move everything to a calendar year end. And just quickly to revisit that, we audited the years ended December 31, 22 and December 31, 21. That means that we worked with RMC staff on December 2020 balances, December 21 balances, and December 22 balances since I last spoke to this group. Some of that information we may have been able to piece together with other audit work we had done in the past. Some of it was all new conversations. It was the same conversations, but new timing, new time periods, new actual numbers. Having said that, working with the staff, working with Brett and Matt and Jenny the whole time, they're great to work with. Everything went very smoothly, so we appreciate them working with us to make the process go as smoothly as possible. Anytime you have a change like that, you never know what's going to come up. All things considered, I think the process went pretty well. I'm going to skip around a little bit. The report I just handed out to you, I'm going to start all the way in the back, page 22. Typically, the first report I go over, it's in the back. That's just the way the RUS has come to expect getting this information from us. Should be on a page for communications with those charged with governance. Anytime any entity has an audit, auditing standards dictate that there's certain things that we have to communicate to those charged with governance, which is the board. And what we've done and what most accountants do is we've got one letter that kind of lists out all the required communications all in one page or two here. And what you end up with is what we informally call a report card on the audit. And what you'll also find here is that if you were to look back at May of 21, this should all look very familiar. These are all just our standard communications. It's what I would consider a clean report card. Nothing unusual that I think you're going to hear here that I think this group needs to pay attention to, or pay particular attention to, I should say. Under significant audit findings, first thing we go into is significant accounting policies. And of all the wording in here, basically what it says is there haven't been any changes to accounting policies over the last couple of years. The application of existing policies hasn't changed. That means two things. The way things are accounted for hasn't changed, and all the surrounding accounting standards also haven't changed. It's all same as it's been the last few years as it applies to this group. If there's any particularly sensitive estimates or disclosures, we bring those to your attention. Really, the biggest estimate for this group to think about is the depreciable lives of fixed assets. So you've got all of your utility plant that's built through work orders, and then after those work orders are completed, you put a useful life on those and depreciate it over that useful life. So it's one of the few numbers in your books, or I won't say the few numbers, but one of the numbers in your books that's not necessarily a dollar going in or out the door. It's an estimate over the course of time as to how much expense is being incurred by the co-op. On the next page, if difficulties were encountered in performing the audit, we're required to let this group know. I haven't said that there weren't any. Like I said, the process went very smoothly. If we made any adjustments, if there were any corrected or uncorrected misstatements, any adjustments we made or any adjustments we proposed to be made, we would have them in here, but there aren't any for us to report. If we come to find out that management is consulting with other independent accountants, we have to let this group know and make sure that other auditor or other accountant has all the pertinent facts for the work they're doing. I still haven't come across that to this day. I haven't met anybody that wants to deal with two auditors instead of one, so there's nothing to report there either. So all in all, like I said, this is your standard audit communication. It should all sound very familiar if you've heard me present to this group before. But I think that's probably one of the more important things we do is we present the audit to go through all of those. So now I'm going to skip back to the front of our report here.
For the audit, is this what in my lifetime was considered management letter comments? Is that what this auditor communication, is that also known as management letter comments where you have made observations through your audit that while it doesn't materially change information,
There's two different types of communications. So there's just our standard audit communications, and then there are also internal control issues, probably more in line with what you're thinking about as management comments. It's been a few years since those two were split up and more formalized in the auditing standards, but we actually do also have a separate internal control letter in here that I was going to get to later, but we can go ahead and talk about it now. It flows better with the conversation. The only internal control comment you'll see in here, we have in every single cooperative set of financials we do. It's that RUS requires you to track all of your investments in associated organizations, certain methodology. Our audit's not under RUS accounting standards. Our audit's under generally accepted accounting principles. And they end up getting to the same answer numbers wise, but there's certain analysis that you have to do to arrive at the point that they're using that. And it'd be very difficult. The analysis hasn't been performed. So, and I'll go into a little more detail on that, but it's in every single one of our reports. And feel free to continue to ask questions if anything comes to anybody's attention. I know a lot of times I'll go through this at a fairly quick pace, and I know it's a lot of information quickly. I am on page 3, which is our independent auditor's report. Once again, just to reemphasize, independent. We are not an employee of the organization. We are not affiliating the organization in the sense that we're being reimbursed other than to perform our audit engagement. Independent third party. We are engaged to come up with an audit opinion. And that is the second paragraph of this report. It is an unmodified or clean report. It's as good as you can do for an audit report. And it means that in our opinion, the financial statements present fairly in all material respects the financial position of the cooperative. So it's clean report. And the remainder of the report's really just required that I won't go into a lot of detail on. I am on page 5 now, your balance sheet. This is all information that I believe this group goes through fairly often. So it's a few months old at this point, but I'll point out some of the high notes to comparative calendar years now. Under electric plant, you'll see electric plant in service went up a decent amount from 21 to 22. Talking with the staff, working through our audit, my understanding is there's a work plan, 4-year work plan that is starting to wrap up throughout 22. So he ended up with about $6 million of utility plant placed in service during the year. And obviously you'll continue to see that number grow over the years as you continue to complete work orders and add to your utility plant. You'll also see the accumulated depreciation grow as well. And that's the number that I mentioned earlier is based on the useful life. So as your plant, your poles, your lines, all your other equipment continues to get older, it's depreciated. That's when the expenses hit your books. All in all, you ended up with a net increase of about $4.5 million during the year for your utility plant. Other assets and investments consist of primarily your investments in associated organizations. That number is, for the most part, Hoosier Energy, but includes a few of the other investments as well that you have. We'll have a more detailed breakdown of that here in a couple of minutes. One of the recurring conversations we've had a few times now as we go to different meetings and work with different groups is that receivables were up a little bit this year under accounts receivable and unbilled revenue. Up about $400,000 over the year before, 2.9 million versus 2.5 million. And that's just because if you remember the last week of December, normally cold. So we really saw that in all the numbers this year as they came in. Had that conversation a few times now. And then under deferred charges, we'll see more detail on that in a minute, but that was your NRECA prepayment you made about 10 years ago. That's now been fully amortized. That was an RUS rule that came through to amortize that over a 10-year period. On the other side of the balance sheet, the biggest changes that caught my eye were long-term debt. Took another $4 million borrowings out from FFB during the year. Less the payments made during the year, you end up with about 17.9 in long-term debt versus 15 at the end of 21. Then the other item on here that caught my attention is accounts payable purchase power. There was Definitely an uptick in receivables and revenue for the month of December because of the cold months, but unfortunately, that also means it's caught on the other side to Hoosier Energy. That's unfortunately another conversation that I've had quite a bit recently, is the increased costs coming through from them. And obviously, that's what I'm sure this group talks about quite a bit, is the best ways to pass those costs on to your membership the best way you can. I will continue on to the next page, which is your statement, revenue and expenses, or it's your income statement. Operating revenues have continued to increase year over year. They're up about 6%. Once again, you look at cost of power, the first line item under operating expenses, it's about an 11% increase. And once again, I've been seeing that a lot recently as all the co-ops in the state continue to try to figure out how to navigate that difference, or just at least the uptick in rising energy costs in general. And you'll also notice under operating margins that you've got at 2.81% there versus 6.19 the year before. And up the line above, you also see that in the total operating expense percentage of about 97 versus about 94% the year before. So I think the cost of power is really the biggest driver. All in all, you get down to net margins at the end of the page there. That's your bottom line here. It's about 1.2 million in the positive compared to about 2.5 the year before. Similar to trends I've seen with other co-ops. I'm going to skip over page 7 and go to page 8 now, statement of cash flows. All the detailed conversation. You've also paid down about 250,000 RUS, 312,000 CFC, and another 460,000 FFB during the year. What all these different totals get to is that at the bottom of your page here, cash and cash equivalents at the end of the year ended about $642,000. A little bit down from last year. When I say last year, I mean December of 21. A lot of the times, the amount of cash on hand, though, is just purely dictated by timing, what's going in and out right before year end. Unless any questions, I'm just going to keep along here. Page 9 and 10 and the top of page 11 are the summary of significant accounting policies. I mentioned the first letter we went through that if anything had significantly changed in your accounting policies, I'd be required to specifically mention those to you. There aren't any significant changes, and that's even going back to May of 21 here. So your nature of operations, basis of presentation, everything in here should look very, very familiar if you were to be looking at the last set of financial statements this group had in front of. So I will continue on over to page 11 and just go quickly through the financial statements. Electric plant and depreciation rates. Distribution plan, as I mentioned, went up quite a bit during the year. You're $48 million, about 48.4 versus 43.8 the year before. Those work orders, different line extensions and other work orders that occur throughout the year. General plant, that's going to be this building, other miscellaneous equipment. That's what the 5.6 million is. No significant changes in that year over year. And no changes to your, for the most part, to your depreciation rates during the year, those estimates of useful lives of your utility plant, other equipment. On page 12 now, which is your investments in associated organizations, and they're a little bit more narrative to this now, but essentially you have investments in several associated organizations. That's what accounted for in the GAAP world. It's called the equity method. And it's really stemming from a place of RUS dictating how it should be tracked. What you end up with is, as you invest in these different associations, a piece of their margins is allocated to the co-op, at least on an annual basis. And you get a piece of those margins each year. So they send you something that says, we have allocated X amount of our margins to you. And when you get those margins, it increases your investment in that organization. Typically, most of these also do some sort of retirement or issue you some sort of throughout the year. When those checks come in, that reduces the investment. The investment goes down for the payments coming in. One thing here, and you may or may not have worked with Joe. He's one of the other partners at the firm. He's been doing it a little bit longer than me. He said the first time in his, I think it's 20 to 30 years of experience, it's the first time he's ever seen Hoosier Energy's number go down. And good, bad, otherwise, what it means is that they allocated margins to you, but they sent money to you that exceeded it by enough to actually decrease the investment for the year. So it means more cash came in than the margins that were allocated. Not something you expect to see every year. So the chart at the bottom of the page, you've got 17.7 million or so, 16.2 of it's Hoosier Energy. And then you have your certificates with CFC and a few others round out the total. At the bottom of page 12 of the $908,000 of income during the year, 780,000 of it was Hoosier Energy. I think I misspoke a minute ago when I said 780,000 in cash came in from Hoosier Energy. It was actually $1,720,000. So I misspoke, and I think I gave you the income number instead of the cash numbers. That threw you off.
Can we stop here?
Yeah, absolutely.
Where in these financial statements are we going to see any of our associated costs with the closing of Miriam and the stranded cost recovery that we're going to have to, the stranded costs we're going to have to pay? So are those, is that as a show up as a liability anywhere in these documents? So we continue to pay those on a monthly basis as part of our power bill. So our power bill did go down, but we have this stranded.
Our answer is
We have this stranded cost payment that we are making monthly. So it really doesn't show up on any of these financial statements then anywhere. It's just treated as a operating expense as your part of our power bill.
And I know that, right, yes, as you're paying. And I know there's been talks, and we fielded questions about, is there anything we need to do up front? We've heard about this. Is there anything at the end of the year that, this is either coming back to us or going out from us? Everything we've seen so far is just, it's an increase in your power cost.
Yeah, well, the base rates went down, but we added the stranded cost recovery, so it really netted it out.
Right.
So.
Yeah, and I know that's, like I said, I'm not always involved in the detailed conversations, but yeah, I know that's part of, it was calculated that more money came in the door from Hoosier, not knowing that these costs were coming to you.
And we do that on a 10-year average. So the next set of 10 years, that number goes way up. Goes Hoosier went to a fixed guaranteed margin in that next. So we're trying to pay some of those years a little bit ahead, so it's not such a burden for them. No, things are not as good as they are.
Right. So that's, I think they've communicated all the different things they're doing, and it's the big question that every board faces is the best way. These costs are coming, they're coming. In addition to the fact that fuel costs and energy costs in general are going up, It's how do you continue to pass these along as fair as you possibly can to your membership. Since Hoosier Energy is such a big component of the financials, one other required disclosure at the top of page 13 is some information from their audit. And one of the reasons we don't start wrapping up our audit reports until about, late April into May, where we are now, it's usually more so in May, is because we have to wait for them to get their audit completed. So we've included these numbers in here. And so that's what you got here is total assets, equity, and net margins for Hoosier Energy for the last 2 calendar years. Those are in thousands. It's Hoosier Energy doesn't have 1.9 million in assets. Haven't had 3 zeros at the end of that. Just summarizes what their totals are for the year. Continue on footnote 4 to disclose that there's commitment to Hoosier Energy to buy power from them until 2050. We have that in all our co-ops. Capital totals for the year, the assigned and assignable, that's just going to be the fact that the assignable pieces are current year margins. When I say current year, that's 22. So those are assigned to the membership after that year closes. So just how that's always worked out time. Some other equities, which are unassigned margins, donated capital, $450,000 there at the end of the year. Page 14 is your long-term debt. Couple of high notes on this. You paid off the RUS balance, but still have quite a bit through FFB. I know last time I was here, it's been a while, but we had some discussion on the requirements from RUS, the presentation that they require. FFB is under the same umbrella as RUS. They still have all the same requirements. That's why we have all the governmental wording in here. That's why we had to do the 2 full comparative calendar years. That all comes down from RUS, that format there. Total debt at the end of the year is about 18.8, about 15.8 the year before. Of that amount, about $863,000 will be paid during 2023. You can see towards the bottom half of the long-term debt page, you'll have 863 and then the 800,000 over the next several years. Your maturity on your long-term debt that you'll be required to pay in principal. You continue to disclose that you have a line of credit available. Your CFC is $1 million line of credit. There were no balances on that each of the last 2 years, but it is available to the co-op if need be. Page 15 now. First footnote labeled pension plans. That's the NRECA retirement plan. I mentioned a minute ago talking through the balance sheet that there was a deferred cost number on there that we've amortized down over the last 10 years. And that was in 2013, all of the cooperatives had the opportunity or the option to make a large prepayment to NRECA to boost what they had in their plan. And in turn, you received a discount over the last 10 years. So that has come to an end now, and that number is no longer on your balance sheet. Well, high notes in this footnote pertaining to that plan. Cooperative made about $325,000 in contributions towards that plan for employees during the year, compared to about $314,000 the year before. Another interesting, or I won't say interesting, but important note on this footnote is that there's a zone status that has to be applied. There's some rules when you have multi-employer plans like this, some additional reporting requirements. The zone status as it applies to this plan is that it's over 80% funded as of the end of the year, whereas the last time that this information was available. That's really good for retirement plans. That's a good thing. You can theorize as to what happened there. I guess we don't know, and they took in a lot of large prepayments in 2013, and the market's taken a little bit of a hit the last couple of years, but for the most part, over the last 10 years, it's done pretty well. So it makes sense that the plan's in a good spot as of right now. And then we have put a table of those deferred charges at the bottom of page 15 there, just to show that there was a little bit of work plan expense, but the majority of the deferred charges at the end of 21 related to the NRECA balance. Finally, on page 16, if there's any major customers significant enough to the operations of any entity, organization, company that you do an audit for, we'll disclose that fact. One customer in this situation that accounts for over 20% of operating revenues. And we put numbers for the total operating revenues and year-end accounts receivable for that one member at the end of 22 and 21. Subsequent events at the bottom, or the last footnote on 16, means that if anything arises after December 31st of 22 and today, so after then and before today, that's significant enough that we think it affects what a reader of the financial statements will interpret from everything, we'll put it in here. Usually it's not good if we put something in here. Unfortunately, the most recent example of this that I have is the pandemic. When we finished up calendar year 19 reports, nobody knew what in the world was going on. And so as of March, we're issuing reports. You just saw a lot of these. More common items would be if there were significant borrowings or significant changes to operations, things like that. You might see something in there. Nothing like that has occurred since year end up until today. And we actually talked to the RNC staff until we wrap up. We continue to get financials, board minutes, things like that. Make sure nothing's come up that we need to consider. Continue talking to attorneys, all those sorts of things up until today. That report I mentioned a minute ago, the internal control report, is on page 17 and 18. Quite a bit of wording to what I said earlier, but ultimately this explains, and what it doesn't explain is that we are engaged to do an audit of the financial statements. One thing that is discussed a lot amongst auditors is that there's something called an expectation gap a lot of time with an audit. It means that a lot of people hear the word auditor and they think we are coming in and actively looking for fraud, actively looking for people stealing or things like that. That's really not what we're engaged to do. We're engaged to come in, financials of the organization, and come up with an opinion on whether or not those numbers fairly present the position of the co-op in material respects. As part of that process, we have to understand all the processes, procedures, policies, everything that's followed throughout the year. And if we find any issues with the way things are being accounted for, the way things are being tracked, or anything like that, that's significant enough that this group needs to know about it, it goes in this letter. And the only thing we have in this letter, having said all that, is the tracking of those associated organization balances. And that's all just in accordance with RUS. It's something we have in all. So, like I said, I know that is a lot of information quickly. That's all I really had to talk. I do really appreciate all the help along the way. Like I said, anytime anything changes with the audit process, year end, turnover, and people, things like that. Luckily, we had the same group of folks to work with we've had for the last couple of years. They're great to work with. Did all the work really, 22 remotely, and 2021 we came out on site a little bit, but we were able to wrap things off from our office, and it all went well. So we appreciate it. Anything catch anybody's eye along the way?
Chris, just an observation on way back on the balance sheet, way back when
Oh,
we
yeah.
first started talking, just an observation that even though our receivables went up by almost $400,000, I note that the allowance actually declined. I know, in my world, never trust a receivable over 30 days. So
Yeah.
even though it did increase, the integrity of those receivables is actually better than it was.
Folks that work with it every day might be able to say it better than I do, but I believe you went from deposits at one point in time to automatic shutoffs in the last few years. I think that really the prepaid. So that really helps those things out. Everybody knows where they stand, and you don't really have as much.
That was my question. I'm glad you brought it up. So we have in the board packet this month, there's a number for write-off accounts, and it's not anywhere near these numbers. So where are these numbers derived?
Probably a little conservative to have the number that high, but we look at it from a standpoint that's an estimate. It's purely an estimate.
So that's just some kind of formula used based on our revenues, our monthly revenues, or yearly revenues.
That management's come up with over the course of time. The way we look at that is that it's a good thing that you're conservative to have a number.
Sure, but this is like, we're gonna write off what, 18 or 13, and this is 248. That's a drastic difference.
It's 248 on down about $20 in receivables at the end of the year, so a little less.
So it's just a function of the numbers.
It's a rolling calculation. we look at it from a standpoint, it's conservative and it's not materially affecting any readers on anything. Do you think you need to lower it? It's a conversation maybe you guys should have. You'd be hard pressed to have an auditor tell you to lower your.
No doubt.
I don't know that I'd be able to disagree with it.
Me too.
Yeah, any accountant really put it that way.
Hero shit line.
Yeah, it's exactly.
All it takes is one larger person.
Right,
And with 20% revenue from that customer, I could, if something crazy happened, maybe that number doesn't even.
I've seen that before where, I won't get too specific, but one of the co-ops had their largest customer changed ownership. They lost a couple months worth of billings. They never got it back. So there are times where that allowance makes sense. And we kind of do an analysis over the last however many years, 6, 7 years. And it is much higher, I think, than history has dictated. So.
We don't carry any insurance on that either, so that was one thing.
I was gonna be like, is this number higher now because we dropped the insurance?
No, not necessarily. That was a reason it was never really wanted to be dropped.
Right.
It was a comfort when we dropped that insurance, that you did have some of that cushion, although.
I'm not gonna advocate lowering that.
I'm just asking a question.
And Chris, you'll back me.
We said you're hard pressed to have us go there. It's easy for us to get comfortable with something going that other way.
Got questions for Chris? Anybody else? Thank you. Thanks again.
Appreciate it.
Safe travels. Thanks.
All right, so if we have any discussion left, I'd like to go ahead and approve the audit as presented. So need a motion to support that. A second. So we have a first and a second. All those in favor say aye.
Aye.
Opposed? say
Aye.
Okay.
That might have been delayed.
That was, hey Suzanne, were you, yay
Yes.
or nay? Okay. And Brian? You there?
In favor.
And I didn't, anybody opposed? All right. Next item for your information. Anybody have any questions? Next item, approve previous.
Matt Raber asked if we needed order proof or money to pay bills.
It was stated to notify them, he doesn't need approval. I thought we agreed to that. That he can pull short term without. So,
I think what you guys said was just, you need to know, we need to notify.
Tell you when we do that.
but I just want to make sure.
Yeah,
that you,
I think you're right. That does need,
that just needs to be put in there that
yes. I agree with you. I think I read that same as you did, and I meant to say something, and then I agree with what you're saying.
yeah, right there.
Notify the board when or if short-term money is pulled. It's borrowed.
Yeah.
Short-term funds.
Yeah, if, just,
When money is borrowed on the line of credit.
Good with that.
thank you.
Need a motion to approve changes. We have a first and a second. Yeah. Wait a second. All in favor, say aye. Opposed, say. Suzanne?
Yes, I.
Okay. And Brian?
Approve as well.
Motion passes. Next item, safety medical wallet.
All right, so for safety moment, one thing we've been hitting really, really hard, IEC's done some campaigns on is active driving with cell phones. So it's just a reminder, we try to remind our guys constantly, put your cell phones down. If you need to pick your cell phone up, pull over, park. We're telling everyone else that because our guys are out doing construction work and we got the cones and stuff out. So just a safety moment. I thought this was kind of an interesting statistic when I saw this. So 175 million people in the US use cell phones now compared to just over 4 million 15 years ago. A lot more people using cell phones now. So the estimates suggest that cell phone users do half of their cell phone time while driving, which is scary. Anyway, I just thought I saw those statistics and I thought, man, I would have never imagined that. But cool moment. So I don't think we do enough to celebrate wins. And so when it comes to what we did in order to, as soon as COVID hit, we knew we were going to have struggles with materials. And I'm going to go through the process, but specifically how we got through this, we did, and I'll just read it. So first of all, how did we do that, right? We identified the risk earlier with our risk management process. And I want to give kudos to Eric Ewing because he and Chris Galloway and Matt spent a bunch of time in the boardroom really studying what were our highest usage items, how much inventory do we have in the field, like out on our lines, to determine what was really critical to make sure that we had enough stock in hand and to be able to get orders in. We pitched the mitigation strategy with the cost to the board. So honestly, this isn't just a congratulations to my team, it's the board. You guys were a big part of the strategy of proving what were large costs in order to place those orders and
and be able to do that was a huge win. We went ahead, as soon as you guys approved that, we placed these orders. It's like literally the next day. And number 5, and it is a huge win for us. We never had to turn a member request away due to supply chain problems. We had poles and wires on site to keep the lights on. And I can tell you, this is not, not all our EMCs fared well in this. You can see I grabbed actually some of the highlights over the last year of where, large housing additions, even just some of your normal new services, they had to put holds on because they didn't have materials. And we never got to the point where, we were that worried on certain high risk inventory. So just want to congratulate my team, the board. I think this was a team effort. And I think it's a really cool moment that we were able to get through. And honestly, even from a costing standpoint, I think we try to look at how much did we save by doing this, and it's really hard to tell, but we also say, yeah,
All the transformers we bought cheaper.
correct.
We got some of them on the front end before everything shot up a bunch. So and we have 4 more of our emergency stock to get. And other than that, we got everything in. So from here on out, it should just be ordered as we use stuff. And we should have enough stuff that if something blows up at a factory, we don't have to have one of our factories in town wondering where they're going to get power for 3 months while we're trying to get a transformer.
So thanks to the board.
Anything
Thanks
else
to
you
the
want to
board.
add?
Yep. Good. Keep rolling. Yep. All right, so I'm gonna go through CEO updates. Just some project updates. There's a lot of things kind of moving, so I'm only gonna update you on a couple unless you guys have questions. One, every year we have to do what we call a SIP. It's a safety improvement plan. One of the ideas for this year generated by the safety committee was to do a recognition project. So we've got that process laid out now. And what we'll be doing is during our all employee meetings twice a year, we're going to kind of get together, celebrate safety as a group. We'll, either have a speaker, short video, or a discussion on something safety, and then we'll recognize anyone that basically we have a nomination form. You can fill out a nomination form. The safety committee gets all the nomination forms, and then twice a year we'll recognize certain individuals for going above and beyond in safety. And then the New Point project was the other one I was going to update on. So that project is nearing completion. We have to finish in putting in the regulators. Other than that, everything's been retired and moved out to the road. So everything's pumping on that project. And then, as you know, once we get that one completely buttoned up, we'll be moving over to the underground here to liven that one and then moving on to pole replacements. Stop me if y'all have questions. As far as the metrics, April was flat on as far as temperature. So this is the temperature, this is the 5-year line. This was April. So we were essentially really flat on if you look at how many kWh we purchased. Temperature wise. So then that goes into the HDD, which is heating degree days. Again, that drives everything to do with sales and kWh. Basically, we're flat. This is the month. Here's our 5-year average. We're basically flat in heating degree days, which in turn drove purchase energy was actually up a little bit, almost, 5% above our 5-year average. So we were a little high. You're going to see that here in a minute. It's not necessarily, usually when weather isn't like you saw the HUD and the weather, because that's not driving something externally is different, right? And you're going to see that here in a minute, but it's essentially our IPT customer has been blown out of the park. But you can see we're about 5% above. And then demand, we're about 2% above our 5-year average. So both demand and energy higher. How's that break out and why is that, right? So residential made up a little bit, right? But we're still way off budget. Commercial actually went negative. Our industrials did pop, so that helps, right? We went from -3 to budget to 0.2. And then you can see this transmission is really carrying the bucket when it comes to demand and energy. And you'll see that in our power costs in the black too. So we were at minus 6.35 with those changes I just went through to the classes, down to about 1.52 from budget. Quite honestly, 4.52 could come back in 1 or 2 months pretty easily. So not too far off of budget when it comes to sales. As far as outages, knock on wood, whatever, it's really been quiet. We've had our outages, but none of them have really been long outages or outages that consume a lot of members. Typically by now you would see at least on a normal year, you're going to see 2 spikes that are close, if not one being over that red line. So it's been really, really quiet. As far as lost consumer hours, you can see this is April. This is our 5-year average. This is it's a metric that we look at, but one big outage could blow this thing out of the water. And as you can see, the 5-year on this one is because we had that big outage in April back in 2020. So we were 664 hours compared to 4,800, our 5-year average in April. April is typically a stormy month. And then if you look at lost consumer hours by cause, believe it or not, the small animals have been, which I guess it is that time of year, have been the biggest contributor. We just talked about AR. So past dues, this is the 60-day AR past dues. This is our 5-year average. Here's where we're at for April. It equates into about $2,900 right now. Any questions on any of the projects or any of the metrics or anything from my stance?
Good.
Over to Matt.
Yep, yeah, you're up.
All right, first we have our balance sheet. In general, decrease, we got lower cash. And because we paid more of our AP and accrued liabilities, there's really, they both balance out fairly close, and that's what it is. Paid more money out, cash went down. Any questions on the balance sheet? There's really, I guess in my view, there's not a ton of major movement there this month. All right, next we have the income statement. Our revenues are ahead of the budget, as are the power costs. The power costs are running farther ahead than the revenues. And that brings me to Jeff asked earlier in the week, what portion of that was in the tracker? And I looked that up and I forgot to write that down. One second here, sorry. Brett, do you remember talked about, wasn't it like
It's just over 300. It's like
300,000 or something, give or take some?
That's all 3 classes too, Jeff.
So that's a lot.
When do you think the tracker is going to peak?
Every month they tell us it's a little bit different.
So today, according to the forecast that we're getting, Q3 it'll peak. Q4 comes down a little bit, not a lot.
But they raised the Q4 a bunch too, though. So
They did. Actually, Jeff, I can send that out to you guys if you want to know what their forecasts are.
I was just curious what, you don't need to, no one else probably wants it, I was just curious.
all it's done here lately is the forecast keeps getting higher. So, I mean, when it peaks, it'll start to turn. So,
Best indications are Q3.
Thank you.
And the next thing on this, the maintenance expense, we're behind on right away. We caught up a bunch last month, and this month we haven't paid as many bills, so it doesn't show up there. Then the admin and the Building and member services, that's a classification thing there, training and getting everything switched around. I don't know if there's anything else that sticks out to me that I feel is massive this month. Is there anything anybody else has any questions on? I mean, those are probably the big points I felt like were worth making.
So Matt, April was the first month that you collected the higher tracker, right?
No, it's not. We collect the higher tracker next.
So that will hit this next month.
It will, yes. It will start to impact stuff, yes.
Because we're behind,
We're always a month behind,
Yes,
just a month.
1 month.
yes. And it can all vary based off of usage and demand. If it starts to, if it's 95 the entire month of June and everything burns up, it will catch up a lot faster.
Yeah.
It's a usage as well as a cost thing. All right, Brett, you want to go on to the next?
Sorry.
Cash flow, in general, we're down $122,000 this month. I do expect we will probably have to borrow short-term money sometime in the next 3 weeks. We have paid the Hoosier bill, but after that, before we start collecting any money next month, it'll be close. So depends on how fast we get bills.
And that we lost. We got it, sorry.
All right, then we have plant, distribution work plan projects. That's the wire return as well as some of the bills that came in on this out here. New services, that's netted with our aid and construction. So you probably noticed that went down in the last month. We had a large aid and construction. Meters and transformers, that pretty much, other than the 4 that we're still yet to receive, will make up everything from our emergency stock orders. Then the 2022 red tag Westport, that's all internal polls that were done. The meter polls, most of that is actually underground. That's done when metered pole was condemned and it was turned to an underground or a service upgrade. And then the 2022 budgeted G2, G4, G6, that's the last of the cost from the 2021 red tag polls. Or red tagged in 21, done in 22, and I sent you all an email on that today. So I understand you probably haven't had much time to look at that. So any questions on that, if you could email me, we can,
Will do.
or come in and talk to us. I mean,
I just want to clarify what you said. The red tag replacement poles that we're putting on the pedestals is going under service upgrades.
I have been putting, if it says, so when operations is coding it as a red tag pole, that is being, so they're changing, for example, yours.
Right.
I put that under red tag pole because the red tag meter pole is what drove that. Because that's how it's been tagged in the system. It's coming up, it's how it shows up through the system. If it's tagged as a red tag pole initially, it's gonna come through as a red tag pole. If it's tagged as a service upgrade, it'll be a service upgrade.
Okay, so then where did you put Carl's?
His is in meter pole pre 2022 red tag because the reason that we were there was the red tag pole.
Gotcha. Thanks.
That is in my, in
I'm good with that. I was just making sure, or I understood where it was.
yeah, that's where I put that because I felt like that was, the reason we were there was your red tag pole. So, well, that's, otherwise, right now, almost all of them are being put underground. So there wouldn't be any red tag meter poles in general. Almost everything is being put underground because there's not really a pole being replaced per se. Because the idea is to get everything on a pedestal. So it's kind of it's kind of backwards there in that we're replacing the cut tag pole, but we're replacing it with a pedestal. So we're really not replacing the pole anymore, but in order to follow what we have talked about in here, does anybody else have any opinions on that? I felt like that made the most sense to track it that way for what we were trying to do. I figure as long as it's consistent, that's the main thing. And anything else with this?
We should have brought up the meter pool. I did under mine, but I will. We are sending out letters next week on so we've got a big log of them that we're waiting on members. And so we want to get those moving. So we're going to be sending letters out to them basically saying, been contacted, you're in violation, need to get work.
Nobody's included in this.
I don't know. That's fine. Yeah, there's quite a few.
Most of them.
Did you have any questions on that stuff, Carl?
On that, you sent me,
Yeah.
I don't think there was transformer approximate.
Okay. And that probably is, that shows up under. We wouldn't have transformers part of the service, so it wouldn't be in. I have to ask on that.
Yeah, pad.
We don't charge people for transformers.
But it's part of rates.
It's part of the rates. That's why that would.
The pad transformer was for the pole track. That's why.
Ah. Okay. I can.
That has to do with when we bring in transformers, they go straight into plant.
Right. I know.
With all expenses, and they don't get charged to them.
I understand what you're asking.
Yeah.
I know the pads are more expensive than the old. Any other questions on that?
It's good. All right, Matt, you're still up though. Issue discussion.
Okay, I sent everybody an email, I guess earlier this month. As has been brought up in the last couple of meetings, we are going to need to borrow money in the next probably 3 weeks. We can borrow on our short-term line of credit. The interest rate is 6.75. We can borrow 30-year money as of today at 3.98%. So one of the things when we prepay Hoosier gives us a credit on our bill of about 6.2%. If we borrow the money long-term, we can effectively have that money to prepay Hoosier, and the cost to us as an REMC for the next year pretty well is netted to zero. It's not exact, but it's pretty close. We can effectively prepay Hoosier to make up the difference in the interest rate versus the difference between borrowing long-term and short-term. We have it locked in at under 4%, and we can prepay the short-term money right now is more expensive than long-term money. And then along with that, we are going to need the money long-term, in my view, if we're going to continue to pay back large amounts of capital credits, fix the plant. I mean, in general, our system, from stuff I have seen, poles last anywhere from 40 to 45 years. If you take 1938, 1939, when we were starting in earnest and add 42 plus 42, you come up with 2023. So we're getting ready to have a bunch of stuff that's gonna need to be replaced. And we can see that in our pole replacements this year. There's a lot more of them. I guess my thought is I think, this is my opinion, I think we should borrow the long-term money with it sub 4% and use that to prepay Hoosier until we need the money to pay for pole replacements.
Matt, can you repeat that percentage of what we save prepaying Hoosier and what the long-term rate is currently? I'm sorry, can you repeat those so I can write those down?
Long-term right now is 3.98 as of this morning. It's gone up some in the last couple of weeks, but it's gone up and then it's typically gone up and back down, up and back down. And Hoosier, the prepay is it changes weekly. It's 6.2 as of right now. So effectively, we can arbitrage 2.2% over the course of roughly 3 weeks versus if we borrow on our short-term line of credit at 6.75.
Are there any timeframes less than 30 years that you're looking at?
The cheapest money is 10 years, but it's not much cheaper than the 30 years. I can look that up real quick if you give me 1 second. I have that website saved.
Thank you.
Okay. Five-year money is 3.75. 10-year money is 3.72. 20-year money is 4.02 and 30-year money is 3.98.
Do you have the total interest paid on those amounts?
I didn't calculate that because it would vary every day.
That's fine. I can get a rough estimate. Thank you.
That, when you sent out the email back on early part of May, the rates were 3.83, 3.81, 3.75. The overall trend has been increasing.
Yeah, but it does that for the last 3 to 4 months. It's gone up a little over 4 and then it's dropped back down. I think right now it's creeping up because of all the talk that the government's going to default. And the moment they reach a deal at the last second, it'll drop again. So it's the game of chicken right now in that, well, what if they maybe decide to jump off the cliff? So my personal thought is that if they make a deal, it'll drop. If they don't, it'll go up.
The last board meeting, it was 3.66. So now we're at 3.98. Short term was exactly the same. So short term didn't go up with that hike because it was 6.75 last month also. Is that right?
I thought the hike was in I can't remember.
I'm just asking.
I thought it would have went up with the hike.
Well, we reported 6.75 last month and now you said it's 6.75 tonight for short term. So is that what it is? Because it's the same. It seems odd that it would be the same.
I thought I said it's gonna be 3.6 or maybe I didn't. I can't remember there.
Oh, short term, 6.75.
It would have went up with, it follows that. So maybe I said that wrong. Check.
So Matt, your email on May 10th was 6.75.
Well, on May 10th, it would have went up on May 3rd is when the meeting.
Well, the meeting minutes from last month say 6.75.
I'll have to get that. If the email said that, then the email was what it was that day. I know I looked it up before I sent the email.
So Matt, on the approved budget, it's based on LE and year-end actual.
there was a $1,479,000 difference in cash between the two. So instead of 37,990, we should be ending the year at 1,517,000.
LE at year end was looking at it from 930. So in that 930 LE, you have costs that we've paid in this year that were not in that 1231 actual number.
So where I'm getting at is what is our cash projected to be at the end of this year? If you add in the $459,942 that we sold in wire,
Got a cash projection.
That's an LE though.
It is. I mean, it's,
So you're going to be estimating.
I am estimating, yes. I assume you're wanting my estimate, right? If we borrow,
we're year end of 2023, what we're projecting in cash, because our budgeted number is way off.
I've got us borrowing roughly $500,000 through the course of the year, and we're gonna pretty much have very little money come till December, because that's when we typically get our Hoosier money, and that's a big jump.
So in our budget process, there's major holes in it. Because based on this, we shouldn't have to borrow any money.
But you're not looking you're looking at the cash flow statement, and that's probably the best way I can describe it is you're looking at it from a checkbook standpoint, but with the LEs and stuff, it's accrual accounting. We didn't put into that, the stuff that was budgeted in 2022 were in that LE year-end number. Just because the cash ended higher than that doesn't mean that that money wasn't already allocated to be spent. It was allocated in 22. So if you take the budget number, that is how much money, the difference is how much money was yet to be spent. You can add back the wire. I'd agree with that, because that I left out there because until it was sold, it was not money. And until we got it, a signed paper that it was coming to us, I didn't count it. But the other stuff, we still have projects that the board has approved. I mean, there's the metering project. There's still some cost yet here on the G2. There's the feeder exits project out of Westport. There's projects that
We're all in the budget.
they were in last year's budget,
No, we carried them over and we talked about what would be spent this year.
but that's not reflected though in that cash number.
But it's,
I mean, I'm happy to sit down and go over that and make sure we're all on the same page. I mean,
I'd like to schedule some time where you and I can sit down.
yeah, I mean, I've always been,
Matt, the 6.2% from Hoosier concerns me that we would, make a decision on long-term money based on that, because that varies quite a bit.
it does,
So,
weekly.
yeah, so what kind of confident, I mean, are you talking to John Jackson and feel like that's going to be the number at this interest rate level, or what are you feeling about that? That's as high. Well, of course, this money's as high it's been for a long time too, but it used to be like 1 or 2%. It wasn't really a big deal, but
I guess sub 4%. I look at that still as, I mean, I don't think you can find a single person who wouldn't have wished that they refinanced their house 2 years ago when it was 2%. That's still dirt cheap money. We have a lot of costs coming down the road. The Hoosier stuff buys us time. We're gonna need the money to fix stuff. I mean, we're on a cycle where the poles, I mean, the Westport poles that the guys are changing, those are poles that weren't, I mean, when the board approved, they said have the guys go change as many as they can. Well, that number that was up there, that's all our guys. That's money that wasn't budgeted for. And they're doing great. They're doing a good job, and they're doing it very reasonable. So we're winning on every pole they do, but that wasn't in the budget to start with. That's a win for all of us in the long haul. It's just not a win in my short-term budget. So I guess I'm looking at it from a standpoint of, we know that with the amount of polls that we're gonna test this year, there's gonna be a bunch more rejected. I mean, we don't know how many, but when it's been that many years since we've been at those substations, we know there's gonna be a bunch of poles. I mean, there's gonna be a large outlay of money on pole replacements. I guess from my, and maybe it's the conservative part of it, is I'd rather have more money in the bank than less, and money's cheap. And if money's cheap, I'm giving you the Matthew Raver view of the world, and that's why the board makes that decision. So.
Madam, the three main reasons, I mean, you just put in the pole replacement, but the cost savings with Hoosier is flexible, but how about with the capital credit payback and then the pole replacement? Are those the three main items that you're looking at for this lending?
The capital credits are gonna crush our cash flow. I mean, when we borrow, so part of the thing is with the rate change, we have more money going out right now than coming in. The budget on an annual basis, our money's gonna come in the end of the year. We're gonna have it's just like planting a crop. You're gonna spend the summer, this is like how it is here at the RMC. The RMC is gonna be like farming this year. All our money's gonna be sitting out there all year until winter. We ain't gonna have none. But unfortunately, we do all our work over the summer too. So.
Well, as far as the capital credit money goes, you're getting, I mean, what we're paying back that we're getting from Hoosier, you're getting from Hoosier. It just won't be till the end of the year.
Yeah, so want me to give everybody an IOU in July?
Well, I'm just saying, I mean, that's just part of what you're talking about.
Money when we get it. Yeah.
And that's fine too.
We never said when we were gonna get.
We're just gonna give it back so we can look at it when we get it.
I guess based on those reasons, I think the 30-year is my questioning, not the borrowing amount, the 30-year for the three items you just listed.
And this is stuff that what we'd be borrowing against is our plant. It's gonna be there for 30 years. I mean, this is plant improvements that have been done that we'd be borrowing. That's why the money's so cheap. I mean, it's borrowing against the plant, so. My personal view is if we're going to borrow at less than, I would not think it'd be a good idea to borrow 5-year money for our plant. I would rather use the short-term money and pay a higher interest rate if I was, in my personal opinion there. Just because this is, we only have $2.5 million yet we can get from the government at the cheaper rate. Otherwise, it's going to be a higher rate elsewhere.
Short-term money matches up with what you're getting on your prepay money, which is also a short-term arrangement.
It is. And maybe the line of credit is the answer.
I mean, I normally wouldn't do that personally.
I wouldn't either. That's why
It's not my money, so.
I always, if I can borrow 30-year money at 3.98 and 5-year money at 3.75, I'll always take the longer term because inflation will wipe out my debt to a certain extent over time anyway.
Is there a prepayment penalty on this that you're talking about borrowing, Matt?
Yep, you can't, at the RUS money, you can't prepay. It's a make whole number.
That's one of the reasons it's as low as it is.
Yes, that is what that is why it's so cheap.
Okay, thank you.
And these projects, just to refresh, we're all built to RUS specs. We got bids.
I already turned in all the 219s, RUS.
Inspected it. They're ready to go.
This money is on stuff that is already sitting on our system, done, complete, and approved.
And can be collateralized.
Yes.
You can't just borrow money. You have to put assets in the ground and check it off every time.
The RMC spent well in excess of that out of our pocket to,
Underground.
yes. I didn't pick every single month we could turn in. I picked enough to get us to the maximum yet we can borrow on our current loan is 2.5 million. And I made sure that we got enough turned in that we can borrow the full 2.5 million. And then if they say some of it didn't meet if they do an audit and disallow some of it later, that we're still okay.
How much time do we have? Quite a bit of time before that 2.4 is on the bid.
We've got over a year on that. I mean, it's not a timing issue. It's
Interest rates.
it's just a,
This wasn't a surprise. We talked about this at the budget. This was part of what we talked about. We just wanted to pull the trigger when the time came.
And there was no money borrowed in the budget.
I thought we talked about 2.5,
I was thinking, no.
but we talked about we would address it as the need came. So I guess that's where we're at now.
And that's that time.
well, yeah, we took the long-term borrowing out of the budget. We just put it in short-term borrowing. I mean, that's,
What does that do for you if, remind me what the capital credit number is, 1.2?
I've got that right here.
it's almost 1.3 million. Now,
So
that's-
if you do that and you disperse that in December, so what's that do for you?
Oh, shoot, wait a minute. So it's this one, right? 2023. Sorry, I was on the wrong 225.
last year it was 1.3. This year.
Yeah, 1.225. So ask your
What does that do to help?
Well, I mean, it's 1.225 million I'm gonna come up with.
No, he's saying if you pay it all in December versus paying any out, defer the actual payment of it.
Well,
If you're telling me we're gonna have the cash at the end of the year,
we'll be a lot closer, yeah.
then
Yeah, I mean, that's,
so wait and pay it then.
Not borrow.
So are we getting the money in December? Are we getting the money?
Yeah, I think you get it like in November-ish or.
Are they going to decide?
they haven't said yet
We're going
exactly.
to decide in November, we're going to get it in December.
Yeah,
We'll decide before that because that has to be approved by RUS too.
you'll know when we're gonna get it probably before we will.
Yeah.
So you want us just to pull short term for now? When we need it, obviously.
I think at the very least, it's prudent to defer the payment of the capital credits.
Yeah, I mean, otherwise we're gonna borrow everything.
Otherwise, you're going to be in a much more.
It's deferred. We are still paying. them.
Yes.
But that doesn't take care of the issue in the next 2-3.
No, it doesn't. We're still gonna have to borrow some short-term money.
But it's not gonna be $2.5 million.
No, it's not.
It's gonna be 1.775.
It's gonna be the least amount we could possibly get by with. I mean, we're not gonna borrow any more money short-term than we absolutely have to.
And you can pay that back monthly?
But we can, yeah.
So that was the next part. That's why I asked the question about the tracker. So as we get deeper into these months where we catch up, do you know, is that gonna have, what impact? I'm assuming that's gonna help your cash situation.
In the long run, yeah. In the short run, it's not helping at all.
Well, I know right now, but I mean, you
By December, I'm hoping it will be very helpful, yes.
you
That's
should have some help before then.
some, but
I was going to say third quarter.
yeah.
Yeah, but we're gonna start collecting those, we're gonna start collecting more money
Exactly.
now.
But
But we're
not that
behind,
much.
plus it's not gonna move the mountain overnight. Let's just, I mean, it's gonna take months before that has a measurable impact.
We probably ought to Matt, sit down and put some revenue numbers too, because my gut tells me that we're going to be chasing the tracker all year long.
I think we're gonna be chasing the tracker until we go into a recession.
I don't think there's going to be much.
Or the,
If any benefit.
situation is,
Yes,
right, that would
yes,
help a lot of fuel prices.
yes.
Matt, on the short-term borrowing, is that payment an amortized payment? I mean, it's a principal and interest. It's not like a construction loan, just paying the interest portion, right? You're actually reducing debt each payment. Is that right?
On the line of credit,
On the short-term borrowing?
be honest, I don't know off the top of my head how that works. We haven't borrowed short-term money from here.
I would just be curious, I didn't know if it was like a construction loan that your minimum payment is interest only and you're not reducing any debt, or
That's a really good question that I'm not sure of either, Matt.
Yeah, I don't have the answer to that. I'll have to look that
let's
up.
check on that, please.
Can you verify the rate on the short-term debt, just emails?
And email us on the payment methodology or how that, because I don't know if that would be.
You need a motion to defer the capital credit retirement?
I don't think we need a motion for that. No, we just need to know. Don't pull long-term, go ahead and start short-term. I just want to make sure the consensus of the board is we're going to pay 6.75 for that money. And possibly for the rest of the year. Maybe we'll have a really, really hot next couple months.
Because based on it. Go with that. Short term. All right, continuation of the core discussions, and what brings up to date.
So I did talk with them this past month. Just kind of wanted to give you guys an update. This is what they planned for the coverage map. And then the blue lines in there are where they have planned fiber or already have fiber from different groups. Yeah, they're trying to bring greater connectivity to the Midwest and beyond. So their goal is trying to connect all these co-ops and all these other places that have fiber as a middle mile backbone. So just trying to give you an update on that. The all of 74.
Yeah, there's one that's on 7. Well, it depends.
So that's something we'll
That's
kind
not
of,
built.
that is not built. That is, and we're going to talk about that a little bit because that's our territory. And that's the reason we're having the conversation. But yeah, that's a good point. It is not built yet. So as of right now, the opportunity to join Accord is still at $10,000. That's the price we have to pay to play with and get involved with Accord. They currently have 18 electric co-ops. They have 24 total members. So they have some telcos, some other individuals that are in the Accord membership already. With what Clay just called out on that section there, with joining Accord, we have an opportunity to build out fiber to 3 of our substations along that route. If we're involved with it. If we're not involved with it, they're going to probably build it the straightest possible way, the cheapest way possible. It probably won't touch our substation.
To accommodate them more so than us.
Yes, they're not going to accommodate us if we're not a member. So that estimate build out is 2.8 million. It's about 30 miles of line that would run through our territory. They've applied for the middle mile grant, like we told you before. They expect the announcement June 1st on that. And they applied for 50% of that bill for grant dollars. So with that, we have a possible joint build with Accord, and then Hoosier Net could possibly be part of that too and pay a portion of this also. To lower the cost. If we do join and we do build the 30 miles of fiber, it would give us about a 1% equity into Accord. So with that being said, it's a small investment with a large opportunity. And it's not necessarily for broadband fiber to the home. It's for connecting our substations for the future of the electric co-op. Is right where we need to focus at this point in time because we don't know if we're doing broadband to the home.
But given the opportunity to do broadband to the home, this would be very, very beneficial to have.
This would definitely play a big part of that. And if we would go with fiber to the home, this membership would pay us back a lot more because they would have a lot more lines to connect to and connect other businesses from the fiber to the home. So it opens up a lot more opportunities if we go that route. But even if we don't go that route, within the next 10 years, I would say we need to have a fiber ring to our substations to help with the fiber.
The worst case scenarios, we get fiber between our substations in certain areas.
Yes, this part would help build 3 of those. With that being said, if we join a cord, we could possibly do the rest of the ring around the substations and give them more too, and they apply for grants and help, with the cost of that. So it could significantly lower that cost of build of fiber between the substations. So just kind of looking at that, today we could do nothing and we do not join, that's a decision we can make. We can join at 10,000 and not build the fiber. They build the fiber. It probably doesn't touch any of our substations, but we're a member of Accord for future purposes. And then as we talked about, we could join and connect our 3 subs along that path. And Accord would gain 2 fibers out of that. And then we would get a little bit of return, whatever's transported along that path. It'd be minimal. So the business case for Accord really starts to grow, and where profits really come into play is when you do that with the 3 substations and then do a project of fiber to the home. And then they're allowed a lot more connections and loop ends. It gives you a lot more fiber into the project, so you get a lot more return from that. And then the other thing that they are moving towards is just a financial investor. So they showed us a couple models there. If you don't have any fiber like we do today, you can join Accord and you can invest 100,000, 300,000 into Accord and then start seeing some returns on that over a 15-year period. So those are kind of the options that we have at the table. The deadline with the $10,000 is July 30th. So we really need to make a decision by then, or it will be a lot more expensive because you'll have to be a financial partner at that point in time, and they'll be wanting $100,000 to $300,000 investment to become partners with Accord after that. So, looking at their business case they're at today and the possibilities of the future and the possibilities of what we need in the future with substations and connectivity, I think joining Accord and looking at the opportunity to connect those substations should be our next steps, because we can get that fiber built at a significant cost savings overall rather than doing it on our own.
Crystal, what happened to the smart meter project?
Still projects. Bring that to you guys at a later date.
Wouldn't that alleviate needing fiber at the substation?
No, because we would still, right?
The backbone of RF is
The way you had talked and presented it, I didn't think.
I think you still need to have the backbone, right?
yes, a backbone is still needed in order for those communications to the points for radio frequencies to be able to transport back. They can't just hop all the way back on the radio frequencies. There's still a need for it.
Still use 5G or 4G? Possibly. I just want to look in all angles.
Yeah.
Because that was about the cost of the system was a little over what, 2 million, 2.4,
Yep.
2.8.
Yep.
And we could sell some of our equipment to regain 50% of that, I thought we were told, so.
So Sam, can you put some numbers around this 2 fibers? What does, I have no idea what 1% equity in Accord means and give them 2 fibers. Can you dumb that down for me?
I didn't bring my laptop with me. So Brett, do you remember the business case? So it was basically like $100,000 investment into them. And I believe
It's about 7% IRR. About 7% IRR. That goes, I'll be quite honest, Accord is one of those, you're making a small risk small investment in something that could be a lot bigger. So the IRR of 7% is based on worst case, nothing happens. You get one or two, and we know 5G is coming. The only way 5G works is a ton of fiber antennas. You get one or two of those, your IRR goes from 7 to 20s. That's in their business case, actual numbers. So worst case, you're looking at an IRR of 7. That's equivalent to roughly that 1% equity in Accord.
So what is the risk waiting to see if this middle mile grant is awarded for this project before we decide? Because that's June 1st, right?
If it's released on June 1st, they expect it. It's been delayed several times, but the last we've heard is June 1st that they'll know. And they wouldn't expect to do any build until 24. So that decision wouldn't have to be made that we're building the fiber. But we could definitely, I would say, see if they got the grant for that section.
So that's only a week.
Yes.
Oh,
Yeah, but we don't, we're just recommending, you don't have to do it this tonight.
Well, and that's what I guess
I mean, it's up.
the following. So June 1st is the grant, right? They need /want a decision from us by July 1st
July 31st for the membership,
for the membership
only the membership.
At the 10,000.
at the $10,000. Okay. So not a commitment on to build out.
Correct. So the member of Accord, it unlocks a huge potential too, if you end up doing fiber to your subs or fiber.
Validating your part.
Huge. I mean, right here, we could get a 75% discount on building 30 miles of Accord. Or sorry, 30 miles of fiber. That connects 3 of our sites.
The 2.8 by 30 miles. Is that what did I see that? Yeah, right.
Yeah.
1.4 if you get the.
Sorry, Clay.
I'm trying to,
Asking if that's,
what's the 2.8, of the 2.8 million to build the 30 miles, how much of that is there any of that our responsibility or once we?
At this point in time, the membership, we have no responsibility for the fiber. If we want them to connect our subs,
Yeah.
we will own the fiber. So it will be our responsibility. They expect a 50% grant. So we're looking at about 1.4 million. There's different partnerships. If we also include HoosierNet, there could be a decrease in that from 1.4 million to less too.
Okay, so 2.8 at 30 miles, that's over $93,000 a mile. Okay. So you're 45, 47.
So we don't, at max, we'd be responsible if they get the grant too. So if they get the grant, it'd be 1.4 if we wanted to own the entire thing.
Like, you got 45, get some change.
And we did not do the engineering on that. That's the number that they put in for the grant.
Okay.
But I'm assuming that has made ready, that has everything in it.
Yeah.
But it is an estimate. It's probably a computer generated estimate.
Kind of a tangent issue is our feasibility on broadband. Is that timeline wise, we still 24 is what we're looking at?
I'm sorry, I didn't hear the whole question.
On our broadband feasibility,
Yeah.
grants and everything, we're still looking at 20. I mean, we're not going to know anything until,
Okra is supposed to be released in the summer. I was hoping we would get it. I was hoping we'd get a date from Ernie and, the deputy director when we went and met this past month. He said summer is the best he can give when that will open up. If it opens up in summer, we probably wouldn't know until 2023. And then the BEAD dollars, they expect to open up early 24, probably spring of 24. Once again, you wouldn't know until later in 24 for those dollars too. But those are the 2 grants that we feel that we would be eligible for and most likely be able to receive dollars.
But until you know, you don't know.
Oh, yeah.
You can hope. It's not a very good plan, though.
So what does Hoosier say about this? Because they own the subs.
So Hoosier would probably want to have fiber lines also to connect those for their,
Them about no help or.
I have not reached out to them. Not saying they
They
wouldn't.
don't own the subs, so they own the subs and we put the fiber to them, but wait a minute.
They don't own the total subs though, right? We own equipment within the subs, for sure. They own about, I don't know, they own from the high side and low side, we own all the equipment after that. So there is equipment that we own in there. All the communication equipment and stuff there's equipment in the subs that are ours.
I would say they would definitely be interested in at least leasing fiber.
Correct.
If not, I don't know if they would be willing to chip in or not. I haven't had those discussions at that level with them.
Brett, this
Yeah.
is Chris Galloway. At the Hoosiers Engineering and Operations meeting last week, Hoosier indicated that they would like to help with the broadband in terms of sharing in between the cooperatives as well as between Hoosiers. So they know they're not going to be able to run fiber to all the subs themselves. And so they are looking for co-ops who are doing this themselves to help out.
Yep.
What about commissioners? Gator County, is there anybody teaming up with any of that?
I don't know how teaming up with the commissioners.
I'm joining somehow, getting together and instead of taking all the burden on.
You mean financially, Clay?
Yeah.
Talk about financially underwriting?
Either way, doing something with them to join in on this.
Their joining, I think, is gonna come in when we do property taxes, right? We're gonna ask for no property taxes.
There are some funds, I believe, still at the ARPA. They're very minimal compared to the grant that we're looking at. I don't know what dollars they have left, but I believe it's under 100,000 in the community.
Those are things that
But
we're definitely gonna go after, for sure. You're gonna turn every rock. But it's not gonna be that.
They would be more, I would say they would be more willing to do something to the whole, not this project. Connecting the subs, because the middle mile isn't affecting necessarily the members.
And the end user, yeah.
And Sam and I are working on sort of the use case. We kind of started talking about it. The use case around when we say we need to have fiber to all of our subs. What's that mean? And the use cases around it. We're working on that now.
We've talked about a lot of things chronologically. What do you need from us by when? What decisions do you need from us by when, just so I can put it in a timeline?
I think we need a decision on a cord from the membership side before July 30th. Because the cost changes dramatically.
That's the 10,000.
That's the 10,000. So that's the first step. If we do decide to join, then we need to make a decision. Do we want to own fiber or not?
What would be the timeline for that decision?
That would be based on their grants, but with talks with them, they would not start a build probably until 24 at the earliest. So we would have months, but there's got to be a lot of planning before we do the build. So,
But to actually pull the trigger, we're looking at a $10,000 investment between now and 12/31 this year.
July.
Right, but yeah, that's what I'm saying. But
no, for sure.
there's nothing additional between July and the end of the year. We're talking about, we have to make the decision on the 10 by July, but that's the only outlay we're going to have for 2023.
And could be the only outlay we have, period. It depends on what we do in the next steps.
And what their grants and everything.
After July 1st, if you need to be a member of Record, your $10,000
Yeah,
goes to
understand.
a minimum of 100,000.
Understand, yeah, understand.
And that only buys you, that's not,
Yeah.
that's just cash that you're putting.
I'm just looking from a cash standpoint. We're sitting here talking about cash and we're talking about a $10,000 outlay. The ante end of the game, for lack of a better term.
100. Yeah.
That's like 10 times 10, right?
The 18 RMCs that you said were part of Accord currently, are those all in Indiana?
Yes. And I believe 15 of them do have fiber projects and 2 of them are, I guess, 6. There's 3 that do not, including us. So there's 2 of them that do not have fiber currently. But I was not including us in the 18. So what Brett pulled up here is like, I guess, but this is the most recent broadband map. And this is kind of zoomed out. So when you zoom in, these polygons get smaller and smaller. But everywhere in purple right now is where grant dollars have been funded. What they're looking at for BEAD and most likely Okra, the white areas have not been funded with grants. So that a lot of our territory is available and a lot of those territories are underserved or not served. And that's why they're white, because it's expensive to get there. And I can send out that link to you guys if you want to take a look at the map.
This,
Yeah, it's on the FCC or not FCC, but
Please do. I do.
I'd like to see.
I'd like to see it. Same.
yeah, but when you zoom in, you can really get it defined and those big spots go away and there's a lot more open area. It's just when you blow it up on the screen, it looks horrible. You can't really see what territory you're looking at. So I tried to keep a view so you can picture where Decatur County is there.
It's funny because it follows our territory.
Is there other information you guys need for Accord other than the fact of the grant that you guys would like to hear or know?
The outcome, yeah.
Are there any negatives, Sam? I've only heard the positive remarks coming from you. What would be the negative other than the 10,000?
That, to be honest with you, if we did 10,000 and did nothing else, there's nothing really negative to come from that. I mean, if Cord never takes off, that's all we have invested. And even if we build out the fiber to our substations, and as long as we own it, I mean, we got that at a very discounted rate. So I find it hard to find negatives other than possibly being out at $10,000.
Yep.
Anybody else have something else?
Well, just with that being said, so July 31 is you need that decision, right? On the 10th.
You can see that the June board meeting or
Well,
definitely
your meeting could be totally different. And I wonder if any momentum we have now comes. And that's a possibility. So I
I
guess,
personally would like to know about the grant money.
well, that comes June 1st and
that's
we talked
early next week.
we may have a special meeting.
Yeah, and that makes sense, Jason. I hear that. I'm just concerned that if there is a turnover on the board, the momentum, the learning we've done is going to start all over again. Yeah, I think it's prudent to certainly wait and see what we do on, or what they've done on the grants.
But there's no guarantee that we're gonna know. That's what I.
I'm not.
I can't 100% tell you, but that's the date that.
You're not optimistic that won't.
That was supposed to be 2 months ago.
Yeah,
It's only a week away. What's the risk in guessing now?
Okay.
I will say there's not, I mean, making a decision today or making a decision in 3 weeks isn't really impactful.
Yeah.
But I do want it on the table that a decision has to be
Okay,
Sure.
Fair enough.
one way or the other.
Very good. You all good? Yep. All right, thanks, Sam. You're up again with the bio.
Okay. I'm hoping to be pretty quiet. It was sent out. I hope you guys read it. You guys asked for it. I tried to put it into an SOP for you. We tried to cover all of our basis of what we've ran into and what we've covered, what we've done. And, you know, this has been input from quite a few different employees. So I'm hoping to get your guys' feedback and, you know, if we can move forward with it, or if you're comfortable with it, I guess that's where I'm at with it, so.
I didn't think we approved S&Ps.
We're not asking you to necessarily approve it. We're asking you for the consensus of the board that this is a policy we can go forward with.
There's the difference between policy and SOP.
100%. That's what we kind of discussed.
That's why it's an SOP and it should be.
But we need to have approval.
It does have board implications in the SOP because it requires board input. So that's why I'm asking for board input. Because the SOP requires communication with the board in order to do this completely. So that's why I'm asking for feedback to move forward.
So, well, go ahead, Jeff.
It shouldn't go to the board, it should go to the CEC committee. Which would be all directors that aren't standing up for election.
You mean this, or, because that was my problem with the way this was written. It says it's going to the whole board. I think the CEC, yeah, the CEC should probably handle that.
And that's why I'm looking for feedback.
Yeah, that's my only.
Totally agree.
Yeah,
And that's what I'm looking for.
yeah, I wouldn't involve the whole board. I just send it to the CEC.
So put that, so everywhere it just talks about responsibility that you're taking.
Well, this is just moving forward in general terms, but yes, the CEC as it stands from now till eternity, that would be.
And then the next item is the cybersecurity. Sam, your own meeting?
But hopefully I won't bore you or put you to sleep this late. So I wanted to first say I went to a cybersecurity conference, the NRECA put on just last week, and it was probably one of the best conferences I've been at. Some of the stuff I'm bringing to you now came from NRECA and kind of ties to the other presentations I've given on cyber. The first thing here you see is 10 different goals, and they say RC3. In my past presentations, we started the RC3 program, and this kind of builds off that and enhances it. So we're still tracking the RC3, but I just wanted to kind of go over what these 10 goals are that they put out there that they feel every co-op should be doing. And I'll just go through them real quick. Cybersecurity point of contact, a self-assessment, contract reviews with third parties, multi-factor authentication, default password policies, leadership training, and that's kind of why I'm presenting this today. We haven't really done a real good job of doing cybersecurity to the board, so this is part of that, the leadership training, employee training, IT/OT segmentation, cyber response plan, and data backups. So those are all things that they've recognized. And to be honest with you, we do most of these. Leadership training and employee training are probably the two that I'm keen on to do better.
What's IT/OT, Sam?
So IT/OT is your SCADA type systems in the substations. So how we get reported back data from our substation, controls of the electrical system. Today, we don't have a lot of OT, but that's what the future and that fiber ring and those type of things that will bring those type of controls and keeping those segmented, separated. So that way, if one's attacked, they can't get access to the other.
It's the way, yeah.
So along the lines of leadership training, I wanted to kind of talk about phishing, if you want to go to the next slide. I'm not sure if everybody here knows the term phishing. I would say most do by now, but I just wanted to kind of cover it and kind of show you what metrics we have and what we're judging things by and what we're going to be doing in the future. So phishing is when criminals try to trick you into giving out sensitive information or taking a dangerous action, like clicking on a malicious link or downloading an infected attachment in your email. It's considered a phish email. One way that they do this is they use email to disguise as contacts or organizations you trust, so you react without thinking first. We're all busy when we're checking our email. A lot of times we don't think about it. We just flip through, click, and something bad could happen. So there's a couple ways that, some things that you can do to try to avoid becoming a victim. First of all, you never just blindly click on a link. Try to hover over it, make sure you know where it's going from, make sure it's from a trusted source. If it's unknown, if it's something with DCR EMC, reach out to me. I'm happy to take a look at it before you do something with it. And verify the sender and the request. They'll send invoices, they'll send different things that you think are probably common to click on and open. But if you're not expecting it, or it's not something that's really something that you would ever get, it's possibly a phish. So feel free to reach out to me or forward those to me, and I can verify one or the other if you have questions about it. Because you do have credentials to our email system, and if they're able to get your credentials, they could possibly spoof your email, start sending out emails on your behalf. There's a lot of trickle down effect. You may think you don't have much access, but it can cause other problems down the road having a gating.
Sam, don't phishing attacks have a tendency to create a sense of urgency to suggest to you that this is urgent, please respond immediately? And don't they also have a tendency to have grammatical or misspelled words in them typically?
I will say grammatically, no, any.
Really?
Yes. You have AI now performing emails. So now anybody heard of chat GPT?
Yeah, oh, yeah, scary.
All you have to do is put a question in and it'll type it up for you,
It's unreal.
copy and paste it, put it in an email.
Unbelievable.
So now the person over in India, China, whatever, has a great translation of whatever they're trying to send you. So just grammar errors.
That's why-
Now, grammar errors are definitely a red flag, but it's not always that way.
But the sense of urgency still remains, right? I mean,
That is one way. It's not necessarily the only way, but it is definitely a red flag. You know, if I get an email from the CEO at DCR EMC that it tells me to go buy 20, gift cards.
this has happened.
This is a real example.
We deal with it.
20 gift cards. I looked at it on my phone. I'm out. I'm like, oh, well, maybe I should go ahead and pick up those 20 gift cards. And then you get back and it's like, oh, you're supposed to send them here, So it's a real thing. And it's only becoming worse. We do have filters on our email, but they can't catch everything. So if we can go to the next. So I wanted to kind of go over what we do internally now with testing with phishing. You'll see the timeline here starts back in 2022. Well, our email filtering was doing such a good job, it was catching all my phishes that I was sending. So we didn't have any clicks for like 4 months and I didn't catch it. So once I fixed that at the end of December, we had a 21.6% credit rate because they hadn't been tested in probably 6 months and people were, oh, well, let's click on this. Luckily it was a phish for me. It wasn't malicious. You'll see that we're trending down and we're, in the 8%. I'll go through the next slides. It kind of breaks it down of what the phishes were. You guys do get phished, so I'm showing you percentages here so you're aware. And we'll just step through each month here. But in December, 6 employees, 2 directors clicked. There was 37 emails delivered. 24 actually opened the email, so they actually clicked and it just popped up, just saying, hey, they were ready to read it, but they didn't do any of the actions. So the 8 people actually opened the attachment on those phishes. And the phishes are all different, so it's random. So if you're sitting by somebody else that just got one, that email is probably not the same one that just got to them. So it's very random. It's a very good test. You want to go to the next slide? In January, we're 5 employees, 1 director. And once again, we had 22 open it, 2 actually clicked on a link, and 4 attachments. Then in February, we had 17 open it. So either less people were checking their email or people were just deleting it because they knew it was a fish. It might have had more red flags in it. But 2 and 2 on directors and employees. In March, we had 17 open it, 3 attachments actually open, and 1 employee and 2 directors. Should have 1, right? And in April, we had 18 open it, 3 attachments were open, 2 employees. So I'm not doing this to show or penalize people. I want to train and help people not click on it. And that's what we want to take away from the phishing. That's why we do it internally. We want to have discussions. Hopefully soon I'll be able to add a button to our emails that will actually allow you to just say fish alert. It sends it to me and you're good to move on. And that works on my emails or the emails that I send out as phishing emails, and then any other emails too.
Sam, generally, if you leave those in your inbox, there's no danger, right?
Other than you might actually accidentally click on it. It's a touchscreen iPad, and if you actually, so
What opens if we click on one you sent? It's like a picture of you, or you should open that thing.
once again,
How do I know it was?
they're a little bit different. I think I'll send you the Rickroll video. But they're all a little bit different. A lot of times they'll actually pop to a web page and it'll say you've been phished. Not all.
That's not a scam.
Well,
And then you click here to wipe it off your email and tell us your address. Yeah, give me your social security number. I can get you out of this.
You know which employees, which director, is this your information you did for this?
yes.
Okay.
So I know, I'm not here to call people out on it.
I get that.
But yes, I do know who has.
If you're like me, I'm sitting there going, okay, was I one of those? Cause I'm getting there.
I do it. Are you gonna explain to us, hey, dummy, you were the one that did it? You then clicked on.
And that's the next stage of
Okay.
the training. So I wanted to
Right now.
just be aware of it. And that's part of my plan for this year is to build out a program. So you click on it once, you do this or talk about it. And as it escalates, we do further training.
We've got that as well, progressive, and
You mean my Netflix isn't really suspended? I keep getting that one.
So, yeah. So once again, it's not trying to be punishment, but trying to educate and train is why we do it.
Sam, do you know how many phishing attempts you prevented from getting into our system here? I mean, we had it at work the other day and our IT guys gave a number and said we stopped and the number was incredibly higher than what you would ever imagine.
If I remember right, without looking at it, I say we block over 50% of email that's sent to us. I can't tell you how many were phishing, how many were just suspicious. I do have, the software does tell me I did not run a report on it, but it is very high.
It's high. It's big.
That we do block. But once again, we can't catch them all. And the best security is the end user. So then I just wanted to also talk about some other pieces that we do for security management and cybersecurity is patch management. And why we do patch management and why we do vulnerability management. You may have heard of zero-day risk. Those are basically vulnerabilities that are in software that are just became available. A hacker exposed it. The software company hasn't patched it yet. So it's called a zero-day. So they're actively trying to attack systems that have that software. So we actually scan all of our software. We do a weekly scan on it, trying to discover any vulnerabilities, and then we go through patching. And if you go to the next screen, Brent. This is just kind of a chart of patching, and you'll kind of see it goes up and down with the blue-green line there. I don't really know what color that is, but basically that flows with Windows patching. So Windows releases patches every second Tuesday. So you'll get a bunch of vulnerabilities every second Tuesday, go into the system, and we try to patch all of them that we can. So that's just a monitoring and a patching cycle that we do to try to keep things secure and keep people from being able to get into the system. And then the next big thing that I took away from the cybersecurity conference is tabletop exercises. Has anybody ever performed a tabletop exercise, whether it be cyber and emergency management, anything like that? Does anybody really understand what a tabletop is? So tabletop is you're gathering people into a room and you're just going over a scenario that could be possible. And then you're looking at your policies, your procedures, and testing them against that scenario. And I've done a couple of these this year without offsite, so just kind of random, and we plan on doing them here. One question I have from a board is, if we were to get ransomware, does anybody know what their responsibility or role could be in a ransomware attack? If we say all of our servers got ransomware, they're encrypted. And if we called the board and said this, does anybody know possibilities of what decisions you may have to make?
Cash, get the.
Call Matt.
Yeah.
Bitcoin.
So depending on how big it is, the FBI may be involved. The FBI is going to tell you, do not pay the ransom. As a business, we may have to decide to pay the ransom in order to get the information back. So it's just one of those cybersecurity things that you may not think about, but as a board, that would be a board decision of whether to pay that. It could be 25,000, it could be 2.5 million. We do have cybersecurity insurance, but I almost guarantee it won't cover everything. And depending on their stance, they could say pay it, or they could say not pay it too. So there is decisions that have to be made at the board level when it comes to cybersecurity sometimes. Now, I hope we never have to see that, and I hope we have everything in place to prevent that, but it is a real possibility.
You actually bring up a good point, and I think we should put this probably on the next time you do an update. We just went through all the cybersecurity, or to your point, what is covered, what isn't, how much is deductible. It'd probably be really good for this board to know.
So with that, I just wanted to, if you go to the next screen there, Brett.
Sam, I'm sorry, quick question on ransomware. Are there any kind of published statistics that say if you pay the ransom, do they release? I mean, what is it 100% they release it? I mean, I've heard they've gotten so sophisticated. They've got helplines for calling ransom. I mean, seriously.
So it is a business to them.
Yeah.
And it is prevalent of them to release the information if you pay them. Because if you don't, people won't pay them because you're taking their money and not.
That's a revenue.
So as a business model, now, does it always work? No. You can pay the ransom, they can give you the keys to decrypt it, and it doesn't always decrypt everything. When I was with the hospital, there was another hospital that had an attack, and they paid the ransom, and they did not get everything decrypted because the keys were faulty. And they actually worked with them to try
There's a warranty.
try to get
There's a warranty with your key.
Yeah, so, I mean, because on their behalf, if their product doesn't work when you pay them, the next person's not
Not
going
gonna pay them. Yeah. I mean, it's a business model for them. It really is.
And it's a paid service now, so on the dark web, you can just go and pay and they'll go run the service for you and they'll take a part of the transaction. So on that note, just agreements of the board and the role of cyber. I mean, one of the biggest things that you guys do play is the budget. In order to fight for cybersecurity is the budget that you approve. Oversight of cyber policies. You'll probably see some in the near future from me, cyber policies that will need oversight on. And then making sure that the board does everything that's within those cyber policies too, the same thing as employees. And you guys have kind of felt that when I turned on two-factor authentication. For you guys have to have it just like employees do. And then just educating in cyber risk, and that's part of what I'm doing now, and being able to answer questions for you guys, so.
Thanks. All right, continue on over here. I think we have the Roundup Trust appointments. And I know Dale, I had spoken to you.
Spoke to,
Cindy Wilkerson, even though, from what I understand, I don't know, did we find out, it doesn't have to be in the same district, does it? But she's moved on to your district.
well, but did Ray, it was my understanding that Ray was up in the air as to whether or not he was going to continue.
Did we find?
That's what I understood. I haven't spoken to Ray. But I had no knowledge until last month that this didn't even come up because he was contemplating it. And then I think you mentioned, Cindy's name came up. I have not spoken to either one of them. I'm fine either way. I was just curious.
So I think what I heard you say though is Ray still may be receptive.
That's what I understood. I have not specifically spoken to him, but I thought the first communication that I read, I don't know if it was on last month's, is that he was undecided. It wasn't as though he had definitely decided.
Gotcha. Brian, are you there?
Yeah,
Did you talk to anybody?
yeah, I have Craig Coors as my candidate.
Here's the memo from 4/19. For my district, Ray Vaughn, first elected in 2020, eligible for another term. He expressed in February's meeting he wasn't sure he would serve another term or not. All right, so there's been communication that's dated 4/19. I have not spoken to her.
I think we probably need to talk to him.
I can, I will be happy to. I mean, that's not a problem.
Because we know that Cindy's doing it, but I had reached out to, actually, Jennifer McNeely. I saw her here on the night of lanes and lots, and so she's available to do that, but I think we need to check with Ray.
And once I get a disposition conveyed to you.
Yeah, well, I guess we need to approve.
If you get it to Jeannie or myself, one of the two, we'll get it out.
But that, I know Cindy already said she would, so before we approve these, make the phone call and then send all three names at one time, and hopefully everybody will follow through. Okay,
I'll contact Ray and find out.
let's plan on doing that. All right, Crystal, you're up with delinquent write-offs.
Okay, so 2022 write-offs are 13,486. That was 46 accounts in total. So higher than last year, but still a fantastic number. One thing to note, I can't remember if it's been 3 or 4 months ago, when we talked about moving capital credit money to uncollectible accounts. So when we run this, we have to run the write-off process first to write it off. And then we will run the capital credit process to apply to UA. So when we do that, that 13,486 will actually go down to 85, like 8566. So that will be our official write-off number for 2022. So
Say that again, Crystal.
like the 13,486 will be the write-off process number, but then I'll turn around and run the special retirement, and it's like 8566-ish, 8,500 something. I tested it yesterday, because I wanted to see what that number would be, but I was really excited for the 85. And we did go ahead and run everyone from last year's prior for the last 30 years. We did that on Monday. So all of that money has been cleared out for everybody prior. So we are now up, we'll be up to date when I run this on Tuesday. Take care of a lot of people.
So what was the increase from number of accounts from 21 to 22? Just probably minimal.
I don't remember.
Okay, that's okay. That's fine.
Probably similar, I would say. I know that a few of these in the 46 were deceased. Most of the numbers were very low. A lot of the prepaids were, less than $20.
No.
You don't have to approve it. It's just, we just tell you that this is what it's gonna be, just for your information.
Thanks, Crystal.
Yep.
Brett, this management. What do you want?
I don't really have anything unless y'all have questions.
Okay.
It's just
Yeah,
a
it's
order
pretty
on
self-explanatory. Thanks. Do you have any questions on that? Good. Right, and Krista, you're back up with, meter opt-out.
Yep. So does everybody have a chance to read
Yes.
the memo? And so this has been something that has come up a few times over the last several years. Our stance has always just been, we don't have non-smart meters. We don't buy them anymore. We don't even have them here. We just have a customer she just keeps asking. So we wanted to bring it to the board of what our recommendation is and just make sure that there is not anything that you guys feel differently. My concern is if we go to her and we tell her, this is our stance as a Decatur County REMC whole, I don't want her to say, I want to come to the board and have a conversation. And then you guys are like, I don't even know what you're talking about. No one's gone over this with me. So that's why we're bringing it. It's not we're not asking to create anything new. I just want to make sure that the board and leadership is all on the same page with what our stance is as a whole. So if anybody has concerns or questions about us moving forward with saying we're just not allowing an opt-out policy, that's what we want to talk about.
So you don't even need action from us, really.
No, unless you guys feel strongly against this, then we need to talk about that. But if not, then no.
If I read this right, either the way to get her, I should say, not necessarily get around it, was we're not gonna do an opt-out policy. We're gonna move the meter.
We can pay to move the meter.
Right. This is a solution.
Yep, yes, and it would be all a member expense. REMC would not cover that cost. So we're not saying you have no options, you just have to live with it. There is an option. It's just not one that we are going to be.
Fully responsible.
Yes.
And that'll fall under like policy today, right? Anybody that calls in and wants to go from side of the house to, as long as they're paying.
A pedestal, basically what they're doing. I just didn't want that next call to be, I want to go to the board and have a conversation, and then you're blindsided.
So is the board okay with us putting in the meeting minutes? The consensus of the board is not to offer. Y'all good with that? Just so that we have it documented? Or do we want to do a vote?
It was pretty simple. This is the solution. Option A.
Yeah, I like it.
Option B.
I just wrote.
That's good. So most heads nods. Jeff, was your head nodded? All right. We're good with that. All right, we have some policy reviews and then the education report out. So we'll do the first three reviews. I think that's where changes are made.
There's nothing material here other than grammar. It's just, we reviewed them all. We didn't see any changes. So unless you guys do. And we're making some headway on getting through policies.
So can you do an 18 A, B, and C in one fell swoop?
Yeah, that's
So move.
all in favor, say aye. Aye. Suzanne?
Aye.
Ryan? Okay, we got you, Brian. All right, but we do need to talk a little bit about director of education. The policy is included there. And from a report out perspective, there's three major points associated with this policy. The completion of the CCD within the first 2 years of your term. Attending a cost of service study within the first year, and then D, continuing with at least 2 educational events. Those could be conferences of sorts. There's 3 named here, and or courses through IEC. So there's a list of who attended what. Now, those do not include, what's that? Where's that?
You're reading, refresh.
Refresh it.
Steve asked me to add it on there, so I actually did it during this meeting.
Didn't refresh that.
What that include are the educational pieces, not including the conferences. And I think I've kept track of the conferences throughout, so if I'm wrong, please let me know. Suzanne, I know you took a women's conference. You were at a women's conference session, correct?
Yeah.
But I didn't see another course that you took or another conference you attended.
Yes, I went to the Shelby, Rush Shelby annual
Oh, you
meeting
did?
last year.
Yeah.
Yeah.
She reported.
Mm-hmm.
Okay, I
Yeah,
do remember you telling me that. When was that?
July.
Gotcha. I do remember you telling us that, Suzanne. I apologize for that.
Okay.
So you're good.
Because, excuse me, these are just the education.
Right, and that's what I said. These are just the educational pieces. But I know when we talk about the annual events and what have you.
Would that be a separate list?
Possibly, and maybe we even talk about policy.
So Dale talked to Jeannie about it. And we've got no problem if you guys want us to go ahead. This only comes from an RECA, so
I understand.
it'd be an IEC registration only, or if you went to an RECA thing. But Jeannie said she can put together a spreadsheet to add on to this to essentially track, as long as you guys let her know. Like, hey, I went to X and X, I went to somebody's, whatever, we can track that.
I mean, to me, according to the policy, if you're going to allow attendance as those to qualify, then you need to be tracked.
Yeah.
So I think it makes perfect sense to do that.
Yeah.
Time to do it.
Might want to consider doing that. And I do remember it too, again, I didn't write the specific date down, so I was thinking it was before. We're good there.
We got to the end of the year to get this.
Yep.
Our years of service that gets back to annual meeting.
Oh, so you do it like June to June?
We can talk through that, but
I just didn't realize that.
well, I do know that part, if you look closer, it says within the first 2 years of their term. So that would be from annual meeting to annual meeting. Like I wanted to bring that up to you.
Yep.
Because I think you've only taken one CC.
Yes. Right.
Okay, 2 years has gone. And I don't believe in the next month you're going to be able to meet that requirement. Correct?
Probably not. Petition for an extension or something.
Yeah, you can petition both ways. Yeah. So that's your plan.
It's gonna have to be.
So at this point, you have not, Clay, is that right? You've not made that request. I mean, you haven't had any communication to that effect.
No, I have not. to be honest with you, no.
So you'll need to petition, and I would highly encourage you to have a plan.
How many more do you need, Clay? 5, 4? How many are CCD?
You chose one.
I haven't seen it.
5 for the CCD, and according to this, he has 1, so it'd be 4.
But in it, but Clay, you did not meet, I don't believe, D.
Say it again.
You did not meet the D requirement either. How many education courses did you take this last year?
He did, I don't have it. What you call it, locked out.
B is.
No, I did not get there yet. Okay. See it. Because I didn't get any of the training meeting.
Remember the local REMC meetings as well.
Yes, that's what I gotta give you.
So if you find one between now and June, or the end of the meeting, we'll support that.
Do you have any scheduled, Clay, at this point?
No, I didn't.
Were there some available in the spring? Some CCD courses, or do you know? Or that one you took? The one you took. Because you took the one in November. I don't know if there was any scheduled in spring or not. I know
July.
there's some in July,
July.
but
There will be some in July,
include that in your.
but you better get them scheduled. It might be hard to get all of them in Indy, even within a calendar year.
Well, I'm not so sure, but aren't some of those only offered every other year?
That's the way it was, but I know they opened a couple additional. And by the way, I'll bring it up now. I know, I thought the IC event, I emailed everybody on.
July 29th, 30th.
Is it at a CCD course again?
As a BLC course.
Just the BLC? Okay. My bad on that. I thought they were thinking about a CCD. That's probably what brought it to my attention.
I'm sorry. That's, no, it's in French Lick. Yeah, it's a French Lick. That weekend, the 29th to 30th, Brian Singletary's the moderator are doing. It's a BLC.
So it's that weekend. It doesn't include the CCD. So anyway, you need it.
Jeannie Lockley sent out an email January 20th, and all those meetings for the CCD 2600 series start in August.
Okay, thank you. And how many are listed there, Suzanne?
I'm looking right now. They start on August the 2nd, 3rd, 4th, and 17th would be the CCD 2600 series classes.
Hey, Suzanne, what was the date on that email?
It's sent out. I can just reply it all right now. I'm looking at it January 20th because I looked to see when I could go to a couple of them.
Thank you.
I'm going to forward,
I just got
forward
one
right now.
2 days ago. It has the schedule on it.
And those are listed there.
You should all have that now.
Has the 29th, 30th in French. Wednesday, August 2nd is,
These are just the IEC that I sent.
Okay. So you're good, Clay?
Yes. What's the process to get this thing a extension here, petition for that?
So you're going to send, I would assume, some kind of email or do it in the,
Oh,
and then have your plan included in that. And then that's what I guess we'll approve.
okay.
All right, next item. Got to be in here. The one-on-ones, I know that, I think everybody's been in discussion with that, but not
For Tuesday.
for Tuesday. Carl?
We got, I'll know next Tuesday. How's that?
Yeah, right, I knew you'd been in touch with them, but, go ahead and get that, make sure you get that together. Next item, CFC delegate. So if you looked at, memo, I was one last year, not going to be there. We know that Matt is going to be CFC conference. And, I think he'd be glad to be a CFC delegate. Am I right, Matt?
Yeah.
Because this is not, and I don't believe. Okay. Probably, let's go ahead and make a motion to have Matt be the delegate though. You making the motion?
Seattle.
It is.
I'll second.
First and second, all in favor, say aye.
Aye.
All right,
Aye.
we're good. Look at that, Kevin. Thanks, Matt, for doing that. The next item. Who's your energy report? Jason.
Two quick things. Economic development stance of Hoosier, and that committee is being worked on and be, this because they had a meeting this week, but Hoosier's stance has gone from, if you build it, we'll work it out, to let's talk about what your needs are before we say yes, basically. So they're drafting some new policies around that, which I'm very glad about because that's addressing some of the concerns that we all had because of the capacity issues in the power market, basically. So that is a big change because before it was bring it, we'll serve it. But there's a huge disconnect between utility providers and the state house. You know, the state keeps pushing these projects. I'm not saying it's right or wrong, but we need to be really careful about how we're going to serve those loads. So that's one thing. The other thing, in June, I expect that the wholesale power contract amendment will be approved by the board. And this I've told you guys about will be the small exception, the 5%, which will give us some flexibility in that contract. If we want to do something different with 5% of our load, we can. We don't have to get it from them. And fun fact, CFC reported that over a year, their drawings on short-term lines of credit have gone up 10x for loans. That's what John Jackson reported. So the whole deal and the discussion that we're having tonight is happening. That doesn't make it right. I'm not saying that, but it's happening everywhere. So lenders are seeing it. So anyway, sleep well tonight. That's all I got.
All right, nothing from the IEC board. And I'll ask, I don't think there's any additional training or conference attendance from directors this last.
Anybody, well, those that, the 29th and 30th, is anybody committed? I'm up in the air on that one.
I did sign up. I'd encourage people to sign up. And if it's not meant to be for me, I know there's a cancellation date. I'll have to look. I think it's the 20th. So you do have the opportunity to go ahead and sign up and cancel it. You know, Linda was in here earlier. We didn't ask her, but I don't know how many people have signed up. All right, if anybody has anything else?
Move.